Hello and welcome to today's video, which is called Blood in the Streets. That's definitely what we had seen yesterday, and right now I will dive into who were the winners, the losers, why, what it means for investing themes going forward, and how best we can be approaching it as traders and investors. I will be covering as well equities, talking a little about real assets, and of course individual stocks. You know pretty well my site. Thank you for liking this video and subscribing to this channel. Thank you for liking this and commenting, it helps greatly. Let's start with yields. Of course, on such a risk-off day we had seen yields retreat. We had seen as well dollar move lower following the opening gap. This ties into a certain move in yen's favor, which does not bode well in general. So what have we seen change in this area? Japanese yen to US dollar has calmed down, and there is currently no chart risk of yen carry trade unwinding. So I would not be worried about extra hard to come by liquidity hitting and sinking equities. But right now let's dive into who are the winners and who are the losers. On such a down day, driven by Nvidia semiconductors and as well utilities as part of one theme, the market breadth could have been a lot worse. There have been some sectors that have been saving S&P 500 from a deeper decline. Notably, of course, it was the defensives, healthcare, staples, real estate. These had done well on the day. And financials, they are the unseated leader of this stock market upswing that had started in the earlier part of January, right before inauguration, as I was calling for it to start. So this could have been actually a lot worse, and S&P 500 is clearly in a much better shape than the Nasdaq is, because what had happened would catch up with tech increasingly more over the days and weeks ahead. We had seen as well utilities trim their losses considerably, because while we would not need nearly as much electricity as was projected based on the huge needs and Nvidia business model that had been hit by the cost efficient and very democratizing and making AI available to a greater scope of players than had been previously the case. We would not be needing it that much, but forget not about the electric fleets, for example. These would still require reliable energy as much as dealing with the green transition of the prior administration. The electrical grid needs upgrading, so that is part of the encouraging move that we had seen during the day yesterday in the beaten down utilities that were at one point approximately 4% down as well, while tech had been sinking deeper, driven by understandable players. One look at the heat map that I sorted by volume, you see very clearly the inflows into financials and defensives. What to say? I did not trust AVGO, I did not trust many other semiconductor names. My skepticism about AMD is as well known, but there is one that is standing out, and it's Apple, and we will dive into the reasons why. First, would you say that Nvidia had found the bottom? I would not be willing to jump to this conclusion. The situation is very unsettled, the dust. So while it may rebound, the dealing with what DeepSeek had brought, I will be linking to yesterday's extensive video talking the technicals and business impact on the Nvidia model of selling increasingly more costly and more powerful GPUs with very exclusive margins, double digits, more than double digits. Basically, if you say that 80-90% counts as very luxurious double digits, then that's representing the truth. I guess that with not just me in yesterday's presentation, but others too, more technically, having greater technical background and IT background than I do myself, that they had assessed the DeepSeek as being definitely the real deal in serving AI at a fraction of cost, a powerful and top-grade AI when it comes to performance. The impact on Nvidia has not played out, and of course it has consequences for its consumers as well. We had seen Meta as one of the standouts that had been able to close on a positive note, and you can look as well at all the capex that is behind so many communications firms and tech firms as well. They can save on it and implement more cost-efficient solutions. This is not truly visible in the Google chart, but Alphabet will catch up to this as well, provided they take on the incentives and really save on capex alike. Microsoft had been as well working to close the gap, because what we had seen yesterday is a fundamental event that mostly concerns with the vertically integrated Nvidia semiconductors industry. What it does to its clients, to their business model, that's completely a different question. Moving to the Apple chart, which was another winner, that's thanks to DeepSeek being present already on their products, so that definitely represents a boost, and they had been better positioned than much of the tech industry. It will be highly insightful whether the upcoming earnings of big tech, including ASML, would help Nasdaq get up and return somewhat to its price trend and negate yesterday's hit, or whether it would be still digesting and looking for the way out of this earth-shattering moment. One reminder, I am pretty sure that you are following my Twitter feed keenly. Late in the day I had presented a bullish call for clients, which I had hinted at in the public free feed, as well, and we had seen indeed an aftermarket recovery, shakedowns, and distinct differentiation between S&P 500 and Nasdaq. When it comes to yields and the retreat in yields forced by yesterday's move, we are seeing it being dialed back, and of course that has not bullish consequences for Russell 2000, so that's as well another thing to consider. But my call that took care of both intraday clients and swing trading clients as regards S&P 500 has been in place, published, and clients had been taken care of well before the close, when S&P 500 was readying for an up move. And we had seen pre-market it rise, and I do think that the recovery and return to rotations and breadth improvements, even if tech is really in trouble, would continue. So I am not bearish S&P 500 really here. That's why this video has been called Blood in the Streets, or so, yeah, exactly. So we are having a reasonably constructive day of basing, bottom building ahead. You know already my join page, helping you select what's right for you based on what and how you trade. So do treat yourself to comprehensive services, including one-on-one direct support, and be the first to get my calls. You know my journey, beware of impersonators, obligatory disclaimer, and let's talk more. Thanks again for liking this video.